if you're saving money, a savings account is probably your first stop that you should just consider learning a little bit about. But what's it really for? How does it grow? And what happens if you pull too much money out too often? Today we'll be talking about all of that. We'll break it down, what a savings account is, how it works, and the key rules that you need to know. So a savings account is a place to store money you don't plan on spending right away. It's in the name. It's built for, any guesses? Saving. So not your everyday spending. And there's a few different things that people save in these savings accounts. Think like your emergency fund, which is made up of about 3 to 12 months of expenses. So bills for about a year. So 3 to 12 months. Then they also save for big purchases. A big purchase, I mean, there's different types, but some of the most common are saving up for down payments. And you'd be putting down payments for things like a house or even a car. So you're thinking about buying a car later on. And then, I mean, even people save for simply building discipline. Because maybe you spend too much money, you're trying to get better about it, and this is a way to start saving money. And it's also FDIC or NCUA insured of up to $250,000. So check the local laws regarding this. They update, so these numbers could be completely different from when you watch it. Just look up FDIC insurance if you bank at a bank, or NCUA insurance if you bank at a credit union. It also, it's separate from what's called your checking account, so it's less tempting to dip into. Most savings earn interest. A lot of checking accounts don't. Some do. That's a little bit more into the weeds of it. But that just means that your bank pays you a little share of just keeping your money in the account. The interest is what's called APY. And what that APY stands for, here, let's pull the iPad back up just so we could get it. So APY equals annual percentage yield. And what that annual percentage yield is, we just said you're earning a little bit of interest, which the bank pays you for holding the money there. And there are a few different main types of savings accounts. So you got like your traditional savings accounts. The rates are pretty low. I mean, anything's better than nothing, like you're earning money while you sleep, but the rates are usually under 1%. You got your HYSAs. Highlight this one. We'll even write this one down. We're going to pull the iPad back out. So the main type of savings account that I'd highlight is the HYSA, the high yield savings account. And those are super cool just because the amount of interest you're earning is much higher, up to 4 to 5%. Usually at like your online banks, you could shop around for this. Different banks pay different, and some don't even have high yield savings accounts, but if they do, some people like saving their money in there just because the interest is way higher, way more worth your time. Then there's money market accounts, which kind of combine the savings with limited check writing. It's almost like a savings account that you spend out of and still earn some interest depending on what the money market rate is. Then there are CDs, certificate of deposits. These offer much higher rates, up towards the 4 to 5%, which you're locking your money up for months or years, and then you get penalized if you pull it out. So a tip here would be to look online for high yield savings accounts. Usually crush usually some banks are better than others. So just shop around is what I'm trying to say right here. So let's talk about withdrawal rules, because savings accounts come with limits sometimes, and these are a downside, but it's to incentivize you to save. That's because there's this federal rule called, and let's write this one down, it's called Regulation D, or for short, in banking terms, it's called Reg D. And what it says is that you're only allowed You can withdraw more, but before your fees start kicking in, you're only allowed 6 withdrawals from account. So that's important because that'll consider that it will include different types of withdrawals like online transfers, debit card pulls. So if you swipe your debit card, if you get cash out, even the ATM, bill pay payments. So if you go over that limit, you'll get charged a fee. But I mean, sometimes the savings account fees are super minimal. And if that becomes a problem to where you're just like constantly drowning yourself in fees, you're not keeping the minimum requirement that a lot of savings accounts require, and then you're having to withdraw the money out, you're using it more for a daily spender, it might be time to just have your savings account converted into a checking or even have it closed. It's a super easy process. Just talk to your banker about that. So savings accounts are powerful tools. You'll use them to grow your money, build discipline, stay protected. So just remember to pick the right type of account, watch your withdrawal limits, and stay consistent with whatever your goals are. If this video helped you out a little bit, drop a like, hit that subscribe button. This is part of my Banking for Beginners playlist, and we're just getting started. I'm happy to have you here, and I invite you to join me in the future. See you next time. Y'all have a blast.